Hey, what's up, Borrow Buy Build fam? Welcome back to the channel where we help you borrow smart, buy right, and build wealth through real estate. I'm Matthew, coming live and direct from the Copper State, and today we're all about this, the Arizona Pre-Qualification Form, or PQF, the must-have document for any home buyer in Arizona's 2025 market. This isn't just paperwork, it's required to stand out and land your next property. Today, we're going all in with a simple outline chock full of some tips, strategies, and mistakes to avoid. So grab your favorite bevy, hit that like button, and let's get started. The Arizona Pre-Qualification Form, or PQF, it's a standardized document from the Arizona Association of Realtors that's mandatory for submitting an offer on a home in Arizona requiring financing. If you've never bought here before, think of it as your financial resume for sellers. It summarizes your credit worthiness based on your lender's consultation of your income, your assets, your credit score, and the type of loan you're going for, whether that's FHA, VA, conventional, or portfolio. From land to luxury estates in Scottsdale, every lender from big banks to itty-bitty credit unions and even fly-by-night lenders use this exact form. So why does Arizona want to be different? Unlike other states, Arizona requires this form by law. It's not optional, and it's not some generic pre-approval letter. The PQF creates a level playing field, with about 5,000 of these forms exchanged monthly in Maricopa and Pinal counties alone. It's designed to give sellers confidence that you can close the deal, especially in Arizona's competitive market. Likewise, Arizona's pre-qualification form can't be used in other states. Even California, Texas, Florida, or New York, there's no standardized form. And I've done this for a long, long time, and I know it's common that the approval letter landscape varies wildly from a flimsy one-pager from an online lender to a detailed 8-page report from a major bank. Perhaps this form provides sellers with more confidence in a legitimate offer. New York, a wildly difficult attorney state with co-op properties, doesn't have a universal form. So here's how Arizona's system is different. First, standardization. Every PQF looks identical with the same format, data points, making it easy for sellers to compare offers. Just make sure your lender is using the most up-to-date form, which is located in the bottom. Next, transparency. It reveals critical details like your marital status, whether you need to sell another home in line 8, or if you need seller concessions for closing costs. Also, documentation. Lines 25 to 28 show if you provided pay stubs, tax returns, W-2s, and down payment funds. The only folks who love fully documented buyers more than lenders are sellers. Validity. Note your lender should make the form good through your credit expiration date or the oldest docs in file, as every article of documentation expires after 120 days. So you need to time it right. The consistency and transparency make Arizona's real estate market sophisticated yet efficient, giving you a clear way to shine. Next, there are 6 sections that spell out the deal. First, borrower info in lines 1 to 5. Who's making the offer and whether you've actually consulted with a lender or just filled out an online quiz. Anybody can download this form. That doesn't make everyone qualified to complete it. Next, the financial dependencies, lines 8 and 9. Check boxes that scream deal breaker if checked. Line 8 asks if you need to sell another property to qualify. This is what they call a home sale contingency. And this can complicate or streamline your offer with one or more or less variable. In line 9 asks if you need seller concessions for closing costs, which can, of course, make your offer less or more appealing. Then there are the loan details, line 20. This ID is the likely loan max amount that you qualify for. It's not the purchase price. This is where you can flex your financial muscle, but full disclosure may not always be the best strategy. And then you see interest rates, line 23. Most lenders write market rate to keep it flexible, avoiding confusion in a volatile 2025 rate environment. Also, the documentation status, lines 25 to 28. These check boxes show if you provided pay stubs, tax returns, W-2s, proof of down payment, or reserves. More yes boxes signal you're ready to roll. Last, lender info, lines 36 to 38. That provides the lender's name, the license number, contact info. A reputable AZ lender here boosts your credibility. Likely, having the loan officer details gives somebody to call directly, and this isn't required in most other states, making the PQF a powerful tool for savvy buyers. So let's just take a quick time out and talk Q4 2025. Phoenix median home price is right around $430,000, which is down 3% over last year. And the national inventory is up about 30%, with Arizona seeing similar trends. Mortgage rates post-September FOMC still have a 6 handle, making lenders stricter and sellers more pickier. So it's not a seller's market anymore, but it's not a full-blown buyer's market. It's akin to what they call a balanced market, making the PQF form more critical than ever. So here are a few more tips. First, expect sellers to scrutinize. With more homes available, sellers are going to dig into your financials and avoid risky buyers. Listing agents are more likely to call. Documentation is king. Fully checked lines 25 to 28 show you're prepared and ready to close fast. P.S. Once your file is fully underwritten, you will receive a lending commitment, which is way better than any LSU, but nobody ever asked about that, so you didn't hear that from me. Then speed kills and accounts. The PQF's standardized format lets sellers make quick decisions, especially on hot properties. With over 5,000 of these PQFs circulating monthly in Maricopa and Pinal counties, this form is your ticket to standing out. Here are 5 pro strategies to master the PQF in 2025. First, complete documentation and do it early and often. Before house hunting, get all your boxes checked in lines 25 to 28, which means pay stubs, your W-2s, your tax insurance, bank statements for whatever down payment reserves. Many buyers skip this because they don't know when that right property is going to come along. And I don't blame them, but understand full documentation sets you apart as low risk. Also, you need to time your tri-merge. The PQF expires after 120 days, which is likely due to your credit report. So you need to start the process early and leverage a soft pull. In some cases, I do recommend a full report, especially if your file requires any exception. A soft credit can be updated along the hunt, so your approval stays valid. But if rates drop and you have to re-pull the lock in better terms, there are some disadvantages to a soft pull, and I'll get to that later. Next, go local. Arizona-based lenders know the PQF system like the back of their hands. And they're trusted by local agents, and their quick responses to seller inquiries boost your offer's credibility. This is also more important and more detailed form to follow called the LSU. If you didn't notice it, it's referenced in line 30, and this will drive many out-of-state lenders crazy. Then you want to craft a clean form. Keep lines 8 and 9 unchecked if possible. Not needing to sell another home or requiring seller concessions makes you a dream buyer. Pair this with a local lender in full doc, and it makes them an offer they can't refuse. Now, here are some common mistakes and no-nos. The exact amount trap. Getting pre-qualified for exactly your target price, say $400,000 on a $400,000 loan. This leaves little wiggle room for appraisal caps or competition. Instead, go deep with your loan officer to discuss your focus, your payment, your down payment, your property type. Remember, you know your budget better than any lender, so set the parameters accordingly. Missing docs. Submitting a PQF with no boxes is okay, but it doesn't convey a lot of certainty. Sellers may assume that you're not serious or ready, and you want to work with a lender up front to gather your pay stubs, W-2s, bank statements, etc. See line 29. If your lender remarks this as received, full on underwriting review makes your form fire, lit, whatever. Okay, quick story. I got burned on a file earlier this year because of a late mortgage payment. It wasn't actually my client's account. He co-signed for somebody else's mortgage, and during the pre-qual, he wanted to use a soft credit check. But what happened was I wasn't aware that the account was past due on his co-signed account by 30 days. My client, he wasn't making the payments. That was the co-borrower's responsibility. However, you need to understand it appears on both of their credit reports. When somebody fails to make payment, it affects everybody. And with a recent mortgage late, that became a deal breaker. And I didn't know it until it was too late and cost me. For the rest of the year, I plan to go full credit file or go soft with a ton of digging because all those student loan accounts are being counted as payment, and that could change your DTIs or your credit score. So you can never be too diligent. I think that's the ultimate guide to dominating Arizona's 2025 market with the pre-qualification form. You got to start early, submit your financials, and team up with an Arizona lender to help you make your offer unstoppable. If this video helped, let me know in the comments with a War Eagle and hit subscribe for some more real estate tips. If you got questions about the PQF or need a program recommendation, feel free to visit the site, borrowbybuild.com. Until then, see you next time, friends.